So imagine this, you have your insurance renewal coming up and you're thinking, I got to market this thing out. Well, if the strategy is there and the timing is right, that might be something that you should do. But I met with a guy today and it made me really think of how the market, my industry, the insurance industry, sort of pushes you to quote. I mean, you've all gotten the calls where somebody calls you and says, hey, you're buying insurance, you might as well buy it from me, give me an opportunity to quote. A lot of people, not everybody, will say, yeah, what's the harm in that? The reality is that our industry is built on the same model for hundreds of years. You call everybody in town, you get a meeting, you beg them to quote their insurance, you write a few policies, you move on. It's just purely a numbers game. It's horribly inefficient. Nobody likes it. The carriers don't like it. The agents, I mean, it's easy. It's easy to do. It's not necessarily fun though. And ultimately, that process yields absolutely no benefit to that client if the pricing isn't lower. So I was talking to this guy today, and he said I quote to multiple agents every single year, and I told him, as I want to outline in this video, it's just not an efficient way to get the best pricing, especially long term. So sure, maybe a carrier makes a mistake and prices something too aggressively. First off, you're only going to get those savings for a year. Once they realize the mistake, it bumps back up. This is exactly why most of the time when people say, yeah, they came in with a low ball and then jacked up the rates the next year, I'm sure you've heard this. This is usually why that happens. But second thing that happens is the market doesn't usually change that much from year to year. So what ends up happening instead is underwriters get burnt out. They kind of get annoyed that the same thing keeps coming across their desk when they realize there's really probably no opportunity to actually write the business. So what do? They put it at the bottom of the pile. They give it maybe a minimal effort if they really like the agent, and that's about it. So what's a much better way to approach a renewal? Simple. You approach it with strategy. I would say 3 to 5 years is usually a pretty good range for just a pure price check of the market. But even then, there's things you should be doing to set up for that marketing approach. Paying attention to loss control, cleaning up some of the more risky aspects of your organization. If you know that there's things that would reduce your risks, doing them is going to help with your marketability and therefore should stabilize your costs. Now, the market is we're always battling a market where there may be fluctuations in price, but the best price is for the best coverage, or the coverage you need at the moment when you need it, right? So what I mean is you could artificially decrease your premium if price is all that matters. You could stop buying as much insurance, is a really simple way to do that. But a better approach is understanding your risk profile, understanding your philosophy around risk and where you want to take risks versus where you want to self-insure some things, and then getting the best price from the market at that moment. So all of that should happen before the marketing conversation even happens. Then we want to take some sizzle, give it to the market, and hope that we get a couple of carriers beating each other up, and we get them competitive because they're excited to partner with you, not because they make a mistake, because that never works long term. So partnership, strategy, all of these things make for insurance to be, well, I'm not going to say fun, because I don't think anybody is going to ever think insurance is fun, but it can definitely be a strategy-based conversation and a risk management tool rather than a headache. Thanks.